Hey, good afternoon. Map here, Map Investments. So this is going to be a video on the stock market and this week's action. Haven't done a video in 6 days. Just been busy and with work and family life, and also I was pretty active in the markets. We had volatility pick up, which is a great thing for option sellers and people that have knowledge of the derivatives, futures, and options market, and know how to do defined risk strategies in stocks that you like and have high premiums. So, anyways, let's go through the futures, because futures tell you the whole story of what's going on, and we could take a look at a couple charts and look how the week did. The dollar, I always start with the dollar. Let's take a look at the dollar. It's dollar sign DXY. And we are at 96.15. So the dollar for the week, let me see here. Let's go 10 days, and then we'll go an hour. So for the last 10 days, the dollar, the low was 95.51 and the high was almost 97. And right now we're in the middle at 96. So it's on the higher end. Foreign currencies, really have no positions in foreign currencies. You have the Australian dollar at under 70, British pound at 132, the loonie at 77, euro 113, yen 88, real, peso, and these are probably, the real is probably thinly traded. Swiss franc 108, the South African, I think it's rand 62. I really don't have anything going on with currencies. Bitcoin, I just did a crypto video, so I'll skip Bitcoin. Just keep in mind when you are investing and looking at your portfolios, I highly recommend that you diversify your funds. You allocate them in different baskets. So you want to have a basket of gold and silver. You want to have a basket of cryptos. You want to have a basket of commodities. You want to have a basket of stocks. And stocks, you can do different things with the stocks. You can have stocks in energy. You can have stocks in banks. You can have stocks in real estate and commercial real estate. You can have stocks in the medical field. So keep that in mind when you're building your portfolio and deploying your money. Try and have it in different sectors and in different asset classes. Oil took a big hit in the last 10 days. The high was 80 and the low was 62. I did pick up a small future contract. I picked up the MCL right here, as you can see, the MCL. And I'm up on the MCL $220. I picked it up at 64. My buddy Jeff loves oil, and we were going back and forth, and I'd just been watching it, and I said I gotta grab some, and I wish I would have grabbed it at 62, but it's very hard. Remember, it's very hard to pick tops and bottoms. It's almost impossible. So we were at 79 and we came down to 62. I know Biden opened up the reserves, and they're talking about maybe China doing as well, and with the Omicron fears also, and countries shutting down and flights getting canceled and travel getting kind of on standby. More pressure in the oil markets. The expected move in the oil market for the next 41 days is $15 up or down. You can see it right there on the right-hand side of February. To the right, it's $15. So keep that in mind. So we can go back up to the highs And in the next 11 days, the expected move is almost $6. So that's the oil market. The S&P, let's take a look at the ES. The S&P chart for the 10 days, we were 4740 at the high, and we hit a low of about 4500, and we closed at about 4533. So we're off a good 200 points from the high in the S&P 500, the 500 biggest companies in the United States, and it is diversified in different sectors. The expected move and you can see here on the options chains for the future options, the expected move in the next 11 days can be up 200 or down 200. So that's the expected move for the next 200 days on the S&P 500. They also have futures for lean hog, pork, 81 cents. They have for feeders, the little cattle, the feeder, the baby cattles, 163, and it's on the higher end of its historic pricing, I want to say. And live cattle, the regular cows and stuff like that, are 140. So those meat prices will continue to be elevated because the meat market and the futures, the prices are high, and that's gonna show up in the supermarket. Copper 425 is really held that 4 level strongly, and copper has made historic highs. So copper's still hanging in there, and I've been watching TV and news and and reading, and they say copper has to do a lot with these new EV cars. So it's a metal that's really needed in these vehicles. Oh wow, I skipped good old Mr. Gold. Gold up nicely as a safe haven on Friday's session. Let's take a look at the chart. In the last 10 days, gold came down from 1868 to a low of 1762. And the last couple attempts at 1800, it seems to get slapped down at about 1811. That's what it seems like, or 1815. I did pick up the smaller gold contract, which is its little cousin here, MGC. As you can see, I have a little flag, a green flag. That means I wanted to go up and go over here and check it out on my positions. And the gold position, I'm up 176 right now on that future. So gold, expected move on gold in the next say month, more or less $70, give or take, in the next 3 weeks, give or take, from 56 to 72 on the gold. I like gold. Silver also on the lower end of its trading range. I picked up a contract. That contract moves pretty fast. It's a smaller one. It's the cousin of the big one. And this is a pretty good contract, but it moves. I would recommend probably, I should have played it with SOV, the ETF, but I just went ahead and bought a contract. And it's doing okay. It's up a little bit, up $60. I just got it on a Friday. But hopefully we can see silver go back up. I think they expect to move, I want to say it's maybe $2 or $3. $2 in the next 53 days. So got silver. And silver is in great demand and should keep picking up with all the EV also is needed in those vehicles. So let's continue. The small caps really got decimated this week from 23.77 down to 21.37. So basically, it seems similar to the S&P down. Well, this one was down over 200 points. in 10 days. And let me go to the rut over here, because this one has options, could tell you the expected moves in the option market. IV percentiles at 100%, meaning that the options are very expensive, and the expected move in the next 3 weeks is about $173 up or down on the index. Continue down along the line, and when you see the VIX right now, it was up here. We got the VIX here at 2860. It went from 20 up to 3150, and we got a big sell-off here. VIX usually climb really quick, and then it comes back down. You got to take advantage of the premiums when the VIX climbs, makes everything more expensive in the option market, and it gives you higher probability of success when you're selling these options and your strategies. And when you see things like this, sometimes it's just easier not even to pick individual stocks, just to go easy with just the index itself, the SPY, the Dow Jones, the small caps. And I'll show you some of the things that I did with these big moves. Natural gas, $4.10. This thing has been all over the place. This is silver. Let's go to NG. It's a better chart. From $5.50 down to $4. So pretty big move on the natural gas. The technology sector, big hit on the NASDAQ. I mean, we're down 1,000 points on the NASDAQ. The high was 16.7, and we're pretty much down to 15.7. Taking a look at the options market, IV percentile at 93%, very, very high. And we were expecting in the next 30 days another 1,000 plus move on this index. So, big moves. Oh, I need another cup of coffee. Wow. Dow Jones, take a look at the Dow Jones. From 36,000, basically down to 34 and a half, more or less. They really don't give you good estimated moves on the Dow Jones. From my experience of looking at the options, I don't think, in 13 days they're saying 1,500 points, give or take, up or down. Okay, Dow Jones is composed of 30 of the biggest industrial companies, Boeing and United Health, Disney, stuff like that. Commodities, corn and wheat. Corn and soybeans, pretty range bound. And the wheat has been the strongest one of all of them all. And the bonds have really moved. Interest rates have really... so when the bonds climb, so this is a 10-day chart, 158 to 164. So when bonds climb, means interest rates go down. So let's take a look here so you understand what I'm saying. Take a look at the 10-year. So as you can see, if you're looking at the 10-year for the last 5 days, let's say, it went from 147 down to 135, right? And we're going to look at the 10-year bond, which is ZN. ZN is the 10-year, right? You can see that it went from 128 to 131. So it climbed. The bond future climbed, but interest rates went down. So when people buy bonds, rates go down. When people sell bonds, rates go up. So hopefully you grasp that concept. And that's the beauty of futures. You can invest in interest rates. If you think they're going to go higher, you could position yourself for higher interest rates. If you think they're going to go lower, you could position yourself for lower interest rates. And that's the beauty of being diversified and aware of what's going on in the market. I'm gonna cut this video. It's already a little bit long, but I gave you a little bit of recap of what's going on in the futures markets, and then I'll show you some strategies and some further videos as I do them in the weekend on specific names that I did. I hope you liked the video, enjoy it, and have a nice weekend. Stay safe. Bye-bye.